All right, cool. So let's talk about prices, because I mean, have you guys noticed? Like, have you seen headlines about prices? I don't know if you can avoid them. So here's price gains. This is from different areas in Canada. From 2012, okay? And you can see here, this is kind of more historic norms, long-term historic. I mean, going way back before 2012, somewhere in this range from 0 to 10%, usually around 5% was our long-term historic norms for price appreciation in this area, right? And then we started getting kind of squirrely, right? This is the 2017 run-up. I don't know if you guys remember that. 2017, things started kind of going bonkers. And look, we started getting 20, 30% year over year. This isn't prices. This isn't where prices are. It's year over year appreciation numbers. So we got these incredible growth rates, which didn't really make sense. The market got really frothy. They announced some changes. The government announced the foreign buyer tax, which caused a lot of people to pause. They kind of came down. And then we had like little growth on average, or some negative growth, depending on the segment of the market. So in the starter home category, we never really saw the negative side. On the high end stuff, you saw a little bit more of price drops, which brought down the averages, right? So we see this. Now, we're at this, right? So now we get these price gains that are just skyrocketing again, and they're leveling off, and they're coming down, the froth's coming off the market again, because we can't get 30% year over year price appreciation. Doesn't make for a healthy market. And in our view, we look at this type of stuff, and we're like, well, look, this is like, our opinion is a little bit of currency manipulation going on with low rates, money printing, and that type of stuff, continuing to cause volatility in the markets, which Tom's going to get into a little bit later in his economic update. And so I guess the question for you is, like, you know, we follow this stuff, but what's your opinion? Like, when you see this stuff, what do you think's been driving like these price changes over the last couple of years? These like super high, like aggressive price increases.
Yeah, I mean, I think there's a general theme that I think people need to understand. There is a major supply issue when it comes to housing in the Greater Golden Horseshoe. Like, it is so massive, and over the last, I've been doing this for 18 years now. If they found the most brilliant minds in the world to come in and hired an MIT think tank to make housing less affordable and less accessible, they couldn't have done it any better than them trying to do the exact opposite. And I've said this to the Minister of Housing. I've sat on panels. I've sat with Premier Ford. I've told them this. Like, they literally couldn't have done a better job restricting supply. And what you're really seeing is, and I explain everything kind of in 5 and 10 year increments. If we're investing in real estate and we're doing it for 6 or 12 months, it's probably not the thing you should be investing in. It's nice to have short-term gains because you feel better and you feel like you got in at a good time, but that's really not what real estate is. And over a long period of time, what I've noticed is, whether it's volume, whether it's price appreciation, it really, over a 5, 10, 15 year period, it does go back to the norms. So when we had a situation like 2017, which for sure isn't healthy, you don't want to see, double-digit growth, whether that's 10% or 25%, depending on what it is. It was simply a lot of people having demand for housing in a short period of time, and it ran it up. And what happened was government intervention. People talk about the foreign buyer tax. The foreign buyer tax did nothing. The foreign buyer tax is like the best headline to actually do nothing. We sold in 2021. In 2021, we sold about $3.2 billion worth of real estate in our portfolio, and about $1.7 billion in 2020.
So these are end unit
homes, condos, townhouses to the consumer.
Okay, yeah.
So $5 billion in 20 and 21. I think that we sold 1 unit to a foreign buyer out of $5 billion. So, like, I don't know what percentage of the market $5 billion represents, but it's not 1%, right? And I might have had 40 sales to foreign buyers in 18 years. So that, to me, is not really a big issue. So the price appreciation is going from the simple supply demand. The shocks of either things going up or down in the interim, whether it's low interest rates, whether it's a particularly low amount of supply. Like, right now, we have something like 94% of, I saw this stat the other day, 94% of all pre-construction condos are sold in the entire industry, 94%. Hasn't been that low since I started working. And we have some version of 3 months supply. And with the costs increasing, which we can talk about, development charges increasing, which nobody wants to talk about, but the development charges in Toronto went up $50,000 a door. So they talk about affordability and they say, I want to have affordability and I want to make housing cheaper for you. Inclusionary zoning is making affordable housing, which means it's a tax on everybody else. Development charges are going up, and the unions are in the middle of a strike in some cases, renegotiating wage prices. So we can talk about inflation, we can talk about 10% growth, but if we're 5 and 10 year investors, how can pricing go down? The supply is not increasing. The supply is staying the same or decreasing, and costs are increasing. So at the end of the day, I really like to sit there and say, I have a lot of faith in the long-term viability of investing in the Greater Toronto Area.
You answered like 4 other questions, so I'm just going to throw this out.